B2B session will begin at 2 p.m. at the Grand Salon. The B2B session will begin at 2 p.m. at the Grand Salon. Once again, we will start with our second business session, Changes Through GST, sponsored by Team Global Logistics Private Limited. I now call upon stage the session's chairman, Mr. P.S. Krishnan. Ladies and gentlemen, I would request everybody to please be seated. We're just about to start with our second business session, Changes Through GST. I would also like to call upon stage Mr. Rajiv Kapoor, Commissioner, Service Tax. Next, joining them on stage is Miss Malini Malika Arjun. Miss Malini Malika Arjun, Partner, BMR Advisors. Mr. Rohit Jain, Partner, Economic Law Practice. And Mr. Rajesh Verma. Welcome to all the gentlemen on the dais. I would now like to request Mr. P.S. Krishnan to please felicitate Mr. Rajiv Kapoor. Also honor Miss Malini Malika Arjun with a small token of our appreciation. And Mr. Rohit Jain. I would now like to request Mrs. Shailendra Jain to please come up on stage and honor Mr. Krishnan. I'm now pleased to call the session's chairman, Mr. P.S. Krishnan, to give his opening remarks. Mr. Krishnan.
Good morning to all of you. I have told the chairman FFA that this drinking section should be closed at 11 o'clock itself. But he has extended up to 12:30 yesterday night. So that one reason maybe people are not reacting it when I say good morning. I think with the voice I should say, everybody should say good morning. At least you give respect to people who are in the dais today. Yes. Thank you very much. This is the first time in the history. Before the session, who wanted to speak in this session are being felicitated in advance. This is one congratulations to FFA, so that at least already we have taken something from FFA, we should say something for the people who are attended this meeting. This session is particularly, we are going to talk about GST. What is GST? The government himself is not aware as of today. When they are going to implement, they are all announced that it is going to be in 2016 March. But how this session is going to be delivering their speeches, I myself not aware, because this is not being implemented as of today by government. However, for the precautionary measure, the FFA has taken a lead that all these industry people who are assembled today are anticipating that GST is going to come for sure. That is the main agenda of the government. Having said that, what we should do and what we should follow and how it is going to react for the industry, that is more important in this session. My only thing is that whatever we take out of the speakers today, let us make a paper, and before implementing GST in 2016, if possible, we should send representation right now what we are going to anticipate and what is the problems are likely to be, so that at least when it is implemented, it is being incorporated so that most of the problems can be settled. It's not like any other act. Service tax has been implemented. After that, we have been facing problems. But GST is not implemented so far, and it is being already forwarded by the Rajya Sabha for the panel for discussion. So this is the right time that we can send points. What is this GST about? The indirect tax system in India is currently mired in multi-layered tax levied by central and state governments of different stages of supply chain, such as excise duty, octroi, central excise tax, value-added tax, and octroi tax, among others. In GST, all these will be submitted under a single regime. That is the idea of the government. Today, we are paying different taxes in different places. The government, what they wanted to implement, a single tax in one place, so that the paperworks are minimized for us. At the same time, will not have any hurdles with the department. That is the government's idea and motive. Yesterday also, when Honorable Chief Minister, while he is addressing, he has made it very clear what is the program of the government. And the Honorable Prime Minister is going in a path where people wanted to do easy business. This is the first time in the history. I have been in this customs business for the last 25 years, but lot of meetings are being conducted in customs levels and other levels. Lot of notifications has been issued to revamp the entire system. Hopefully, whatever the points raised in the previous session, all will be addressed. Hopefully, this government will do better. Anyway, it has been completed 1 year. For the next 4 years, I think a lot of changes are going to come. So with this, I don't want to take much of your time. GST, the speakers are going to say, first speaker is going to be from the government side. The first speaker is going to be Mr. Rajiv Kapoor. His Commissioner of Service Tax is 1992 of IRS, Central Excise and Customs. His educational qualification is BE Mechanical LLB. He has worked in so many departments. He got vast experience. So first we wanted to hear from you, sir, that what government is going to do, what is GST is going to impact our members, and after this meeting, what our members are going to carry with them, and how forward they are going to use this GST for their business. Please come and give your lecture, sir.
Hello. Thank you, Krishnan. Good morning to everybody. As Krishna has just said that, the GST at the moment is still in the making stage. After the first discussion paper was out in the public domain, nothing has come out. So only discussions are there which are taking place with the Empower Committee, or earlier now, of course, it's gone to Rajya Sabha select panel. So at the same time, I'm very happy that FFI has organized this conference to sensitize the members what kind of issues which are likely to come up. To be honest with you, as a Commissioner Service Tax in Mumbai, I every day keep on struggling with so many issues because the law has been evolving over the years. We earlier had definition of services, then in 2012 we shifted to negative list, and then we came up with the place of provision rules, then point of taxation. So many issues are there. Now, the best thing in GST, which we know all understand, is the biggest indirect tax reform in the history of the independent India. because we are going to subsume a lot of taxes which are there in center as well as in the states. You have excise, additional excise duty, similarly in the state VAT, entry tax, exit tax. In fact, I had prepared a small presentation, if IT issues, they are still struggling, to just give you an overall view of, the way this entire tax is going to work. You have this constitutional amendment bill. What are the basic provisions? What is the role of GST Council? Because GST Council is going to play a very important role in framing the rules, regulations, the GST rates, the band of GST rates, and the place of supply rules. All those things I wish I could have just run through in 5-10 minutes, and so that you have an overall idea how the GSTN is going to work. Because now you have a single platform by which you take your registration, you file your returns, and subsequently we also plan to shift all these refunds, assessment related issues through the GSTN only. So there's only one network, only one platform on which all of the central government, the state governments, the assessee will be interacting through. So that will be a big boost. But the biggest advantage which I personally feel is going to be the seamless flow of credit in GST. At the moment, you have different stages where either you have a accumulation of SENVAT in your books, or many places you have VAT, you don't have service tax. Some places you have service tax but not VAT. So particularly in the logistics sector, most of the members are in the logistics sector only. In the entire logistics chain, if you see when you stock transfer the goods, you have a lot of credit lying, but you don't know what to do with the credit. But here you all through, maybe in the initial phase you have some, your cash flow or is likely to be more, but once the inventory is exhausted, the entire credit is going to be utilized. So overall it will be benefit, and I'm sure it is particularly in the organized sector. People who are in the organized sector, they will have huge advantage of shifting to GST. And at the same time, I'm sure the people who are particularly in the transport sector, you have many issues where people are working in the unorganized sector. So, if you want to survive, you have to become organized. You have to build up your systems to handle the kind of volumes which are going to come. We know that at the moment, rough assessment is the GDP is going to increase by 1.5 or 2%. So that means the volume of work which is going to increase. So that being not there, my presentation. So, but now, as far as the law part is concerned, we all know that we have a SGST by the state government, CGST by the central government, and IGST is on the interstate transfer of goods, sale of goods. And you have IGST credit is available for payment of CGST and SGST. Similarly, but SGST and CGST cross credit is not available. SGST credit can be used for SGST payment, CGST can be used for CGST payment, and IGST can be used for both the payments. Of course, there is a sequence in which you can avail the credit. Are we through? So, no, I can just, do you want me to go through this, or shall we go for discussion? No, I am open, I have no problem. Huh? Okay. I don't know if I can really read that much far. I'll just come over there. So, like I said in the beginning, what are going to be the benefit? To the trade, you have reduction in the multiplicity of taxes, the mitigation of the cascading effect, more efficient utilization of, especially for export, then a common national market. Then you have a very simpler tax regime, the fewer rates and assumptions. Then today we are every day, fighting on this issue of whether it is goods or services. You have a lot of litigation going on. So this entire litigation is going to be over once you shift to GST. Huh? So all this litigation will be over once you shift to GST. And to the government also, you have a much simpler tax system, broadening of the tax base. You have improved compliance because when you are in a seamless flow of credit, the chances of skipping the stage is very, very difficult. So it is very easy for government also to ensure the compliance mechanism. Then efficient use of resources. This is all, how we all went through in the last 6-7 years. You started in 2006-07 budget, that will start in 2010. Then, various stages we went through. Then you have various committees which were set up by the government, on the dual control or revenue neutral rate, which is a very, very important factor now. What is going to be the GST rate? That is going to impact the really all business processes and how we do our entire business re-engineering or business rescheduling. Now we have an Power Committee of State Finance Minister, which is headed by Mr. K.M. Mani, Honorable Minister of Finance, Law and Housing, Kerala. This is, I'll just go through this because this is important. Rest is all, history and all. But this is important. Now, what are the features of the 122nd Amendment Bill which has been introduced in the Lok Sabha? It gives concurrent jurisdiction for levy of GST by the center and the states. The proposed article is 246A. Then authority for center to levy and collection of IGST on supplies in the course of interstate trade or commerce, including imports. So the proposed article is 269A. Then authority for the center to levy and collect non-vatable additional tax to be assigned to the originating state from where the manufacturing or where the original of the goods is taking place. GST defined as any tax on the supply of goods or services or both other than on alcohol for human consumption. Then just quickly go through the feature. It's a destination-based taxation, we all know. It applies to all stages of value chain, the primary, secondary, and the tertiary. Applies to all supplies of goods, services, which are made for a consideration, except you have, exempted goods or services, then goods, services outside the preview of GST, then transaction below the threshold limits. That threshold limits, again, will be announced after the GST Council is formed. Then dual GST having two concurrent components, central GST and the state GST. You have CGST and SGST on intrastate supply of goods services, and you have IGST, which is a combination of CGST and SGST, which is applicable to interstate supplies of goods, interstate stock transfer of goods, import of goods services, then IGST levied and collected by the center. Additional tax, this is one area which now is becoming quite a big area of concern to everybody, that 1% additional tax to the originating state. Then export of goods, of course, zero rating of the exports. So whatever duty is paid, the refund or the rebate is admissible. All goods or services likely to be covered under GST except alcohol for human consumption, electricity duty, real estate, and petroleum products. Again, particularly for the transport sector, now it is very crucial because a major part component of your input is going to be the petroleum products. So if the credit is not admissible to you, your cost when you are paying, which will include the cost of the fuel also. So that is one area, again, for logistics sector, it is important. I hope as early as possible this date is notified and petroleum is also included in the coverage of GST. Then this is just taxes which are subsumed in the GST. No point. Then as far as now proposal is, there are 4 rates, a merit rate on essential goods, standard rate on goods or services in general. There's a special rate for precious metals, and a nil rate for all exempted goods and services. Floor rate with a small band of rates for standard rated goods, services for CGST and SGST, because there could be minor margin of a band being given to states, plus minus as per their own legislation. Then optional threshold exemption. Then the best part is this credit part, the input tax credit. This is admissible all through the chain. For CGST and SGST, no cross utilization, like I said in the beginning itself. However, no credit is available of that additional 1% tax. Another important issue which I personally feel is going to be the place of supply rules, which are really going to decide where the tax is going to be collected, which is the place of supply. Particularly in the services, it is very crucial. This is, we all know how to pass, the Constitution Amendment Bill is passed, goes to 2/3 majority of the House, and half the states have to ratify. Then GST Council is going to play a very, very important role, because a lot of work has been given. I hope in the coming days they have, like Empower Committee, they have Empower Committee of Officers also, because a lot of procedural issues come up, when you really implement it. If everything has to go to GST Council, it is going to create a lot of problems in the day-to-day working of the, implementation of the law. So I hope maybe as the time goes, you have some committee set up when state government officers and the central government officers, they can decide on the, at least a lot of policy issues. Drafting, in any case, I told you that some committees have been set up. The drafting of this is going on. I'm told that place of supply rule also, and Power Committee has submitted the report, and it's lying with the Government of India now for finalization. So this will also be finalized very soon. And GSTN has been established as a special purpose vehicle and special Section 25 company. Now, I told you it's a common portal for all your registrations, refund, returns, GSTN, everything to work through the GSTN. Now, these are key policy issues, which are very important. One is what will be the extent of dual control? Then what is going to be the rate structure? What are going to be the exempted goods or services? Then what will be the exemption threshold? Composition threshold, role of center states in the interstate trade, place of supply rule for goods and services, mechanics of IGST model, and account settlement between center and the state. These are going on at the moment, discussion in the government on these processes. Single multiple registration within one state on the dispute resolution, which is very, very important. If there are disputes, how are it going to be resolved? Then audit, who will do the audit, how the audit will be done, whether separate audit by center or separate by states, what will be the modalities of audit, that is also being discussed. Then enforcement, that is also a very important area. Then recovery and refund. This is all about GST and network I have just mentioned to you. Common portal for tax payments. Like I said in the beginning that it is going to have a major, this thing on your logistics sector also, because presently interstate trade, like I mentioned that your CST is livable or lot of state, when you set up a warehouse, you see whether what is the rate of the VAT. So a lot of your decisions are taken by the, what is going to be the tax impact, not by virtue of the efficiency of your warehousing or this thing. So that is going to change totally, because IGST is leviable on stock transfer and interstate trade. So it is not going to have any difference whether you have warehouse in one state or in the other state. So important will be from the economics point of view, you can take a call whether I set up a big warehouse where my manufacturing is there or where my supply point is there. So that is going to be a very important issue. Under GST, the tax will be levied on stock transfers and full credit will be available, because all through the chain credit is available. A post GST may see larger warehouses amounting to consolidation of currently widely spread warehouses. Post GST scenario requires all stakeholders, end users, industries, associations and the government to plan in advance so that foreseeable issues could be addressed in time. Another issue which I mentioned to you is the cash impact. What is going to be the with the GST coming and tax structure being changing totally. So how it is going to have impact on your cash balance. So particularly for transporter, particularly these days, and service tax abatements are available. So I think in the coming GST, like I mentioned in the beginning itself, it's going to be no abatement is going to be there. So that is going to impact your initial cash requirement. Liability to pay tax may shift from the recipient to, yes, now another point is now, in the case of your GTA, a lot of these tax is paid by the receiver. But if the shift is shifted to the provider, so naturally provider need to have funds, to account for that margin which is going to increase. Then I mentioned in the beginning, petroleum is a very important factor for transporters. So if credit is not available, that also will affect the, your day-to-day cash requirements. Of course, place of supply, again very crucial for logistic industry. With the seamless availability of credit, GST will score over the existing regime, especially the transportation and logistic industry, where tendency is seen to engage with the unorganized players for tax consideration. So I mentioned in the beginning, so it will add to the more strengthening of the organized sector. I think that is not important. Anyway, this is okay. We can go through, and now whatever discussions we can discuss the issues which are there. Can you switch it off?
Thank you very much for your presentation. Whatever he has presented, I don't want to repeat it again and again because all self-explanatory. He has already given in a way of presentation. I don't want to waste the time. Most of the time I wanted to give to the audience for asking questions. Maybe most of the questions are going to be presumption and assumption only because it is not implemented so far. Even the people who are sitting in the dais are not aware fully what is going to happen. But however, maximum possible they'll answer to the questions. So let me go to the next speaker straight away. She is a law graduate from National Law School, Bangalore. 20 years experience in indirect taxes as consultant and in-house for a few years. Advises many sectors including logistics. She is none other than Malini Mallikarjunan, partner BMR. Please welcome with a big applause.
Thank you, Mr. Krishnan, and good afternoon, gentlemen and the odd lady in the audience. So I'm going to keep my presentation quite short for two reasons. One, after Sir Kapoor has already spoken about all there is to say from the government perspective, I don't know how much more one can talk about in terms of the process of where we are on the introduction of GST. I guess the other element is, like Mr. Krishnan said, while we know a little bit of what GST is going to be, there's a lot that we don't know. So rather than talk about things that I don't know and confuse you further, I'll stick to talking about the few things that I do know and that I think you need to think about. So with that, I'm going to jump straight into the presentation. Just go straight to the issues.
Impact areas.
So before I actually get into the impact and the opportunity for the logistics space, I do want to begin with an overarching comment. As you know better than us, much of the movement of goods in the country today is driven by two considerations. One is the hugely inefficient tax system that we have, and therefore the desire to not pay taxes that one doesn't get a credit of, CST being the tax in question. The other reason is the incredibly difficult, inordinate process of getting the documentation such as waybills, sugams, and all the other road permits that one needs to get in order to transport goods. So I think it's but obvious that the movement of goods today is driven not entirely by commercial considerations, but by all of these non-commercial considerations. The hope and the desire is that with the introduction of GST, some of these impediments will go away and movement of goods will actually be driven by pure commercial considerations. What does that mean for all of you? I guess first and foremost, it means a lot of business, right? Because to begin with, it is expected that the introduction of GST will mean more economic activity, therefore goods will move back and forth much more than they are today, and therefore there'll be a need for people like you to actually move the goods back and forth across the country. Second, it is expected that instead of the completely diversified holding of goods or stocking of goods, we will move to the more international norm of stocking goods in large regional warehouses, because goods will then be supplied to customers across states, perhaps from one regional hub. So that again means another business opportunity for all of you, which is the creation of large warehousing capacities. And with that overview, I'll get down to some of the specifics. So I guess the one big expectation is really that the companies are going to redesign their current stocking movement, stocking of goods, right? Because today, if you know, all of the large manufacturers and distributors have warehouses and distribution centers in every state in the country. That's likely to change. What that is expected to achieve is, of course, a huge level of efficiency in the logistics. It also means there'll be a consolidation because you don't need to have multiple different warehouses. And the other big change is the procedural simplicity. Today, when you have to move goods from Maharashtra to Karnataka, for instance, you have to deal with all the road permit issues in Maharashtra. You also have to deal with all the e-Sagam issues in Karnataka. Hopefully, all of these requirements will go away. And I do want to pause for a moment and talk about why we think these documentary requirements will go away. The reason is simple. Today, a lot of the forms, declarations, etc., are obtained from the tax authorities in order to justify that goods are being moved as stock movement, not pursuant to sale. So all of these things are meant to be demonstrated at each stage. So every transaction where you're either not paying a tax in the form of VAT or where you're paying a reduced rate of tax, you need to go and demonstrate to multiple different authorities at every stage to say that this is what it is. In the GST era, it's expected that likely every movement of goods is going to be taxed. So there is the burden to go back and prove that you're taking a benefit or otherwise will go away. And that is the reason why we think the procedural requirement will get a lot simpler. And the fact, and this is something that Sir also spoke about earlier in the afternoon, that there is the whole GST implementation is going to be dependent on the technological platform that also will mean a technological upgradation for all of you. So instead of dealing with multiple different authorities, multiple different formats and registration requirements, you'll have one platform where you have to do everything, and that will be a fairly robust IT network. This is the other interesting perspective, which is that so far a lot of the logistics is actually done in an unorganized manner. But what's going to happen in the GST era is companies are going to have documents for, for the movement of goods, because while every transaction is taxable, every movement is taxable, all of those taxes are also going to be available as credit, which means what? That every transaction has to have robust documentation. So when you buy a good, when you buy a service, you need to have the invoice, because your credit is as good as that one invoice that you get, and the invoice has to have all the registration formalities of the service provider. Therefore, the dependence on the organized sector is likely to go up. Those who are currently operating in the unorganized sector may be compelled to move to a more organized paradigm of business. What that means from a commercial standpoint, again, and all of this I'm talking from the perspective of what it means for a logistic business service provider. Of course, for your customers who are the manufacturers or the distributors, the implication will be completely different. But what it means for you is also that you may have to review your pricing, because a lot of the pricing today assumes a certain tax component, right? That there is a service tax, and to the extent you buy any asset, there is a VAT, and that is a non-creditable tax. But in the new era, because all taxes will become creditable, you'll likely have to go back and review the pricing as well. I'm going to skip this for now, given that we are short on time, and I do want to talk about what it means for the business as a whole. Now the difficult part. I told you all the wonderful stuff and how life is going to get better because you'll all have more business, GDP is going to grow, life is going to look better. But what about the difficult stuff? Here are a few. What it means, the first and foremost is that the rate of tax on services is likely to go up. We are living in a world where we pay no more than 12% as of today and 14% as of June 1st on services. It's reasonable to expect that this rate of tax will move. Now, whether it will be 24%, which is what is pegged as the average rate for all goods and services, or whether it's going to be a slightly lower rate, is something that I think is still up for debate, and perhaps people from the CBC and the ministry here will be able to advise us better. But it's fair to expect that whatever the rate is, it will be higher than the current rate of 14%. And therefore, you will need to evaluate what that means for your business. The other thing that you'll also need to bear in mind is that the likely rate of SGST, which will apply in different states, may be different. Now, this is again a deviation from what we call the ideal GST system, because ideally the rate of tax should have been in every state. But that's not likely to be the case, and like Sir also mentioned, states are likely to be given a band within which the rates can move. So it may be possible that the rate in different states will be marginally different, and therefore if as the logistics service provider you're undertaking any of the VAT compliance for your clients, you will have to be aware of what those different rates are across the country, and also ensure your compliance is in accordance with that. There is a much maligned and much talked about additional tax of 1%, which is expected to apply on interstate movement of goods. If there is one deviation from an ideal GST, as is being discussed in the current Indian context, it is this 1%. So there are many of us who hope that it will go away, and I'm sure there are many in the government also who would rather not have it, but I think it's a result of compulsions of the negotiations that are currently going on between the center and the state. Hopefully this should go, but if it doesn't, what we are looking at is an additional 1% tax on movement of goods, and this will not be creditable, which means that it will spike your business cost. The other important thing to note is, where do you actually pay the tax, right? I mean, today as service providers, we're all living in a convenient world where you pay tax in one state or one city, irrespective of where your business are, because you get a centralized registration and you're done with it. But in the GST era, it is quite likely that you will have to pay tax across the country, because it will be a destination-based system of taxation. What it will also mean that you will have to determine what is the place of supply. In other words, if you're moving goods, going back to my earlier example from Maharashtra to Karnataka, where do you pay the tax? Do you pay it in Maharashtra or do you pay it in Karnataka? And the reason for that, there is no clarity on this. As per international norms, we expect that there should be a certain level of direction that the place of supply rules will take, but we are yet to see the fine print. And there are certain other issues which you will deal with as well, but I'm going to stick to the key bullet points. So the important point on compliances is, like I said, you're moving from a unified, centralized registration compliance norm to a likely decentralized registration and compliance requirement. That will mean more effort and manpower and administrative costs and all of those elements. The other important thing to note for is actually what happens to the credits that you're sitting on today. For instance, if you have an X amount of SENVAT credit, will you get to carry it forward in the GST era? And if so, what are the conditions that are going to be attendant to that? I think it's reasonable to expect that some transitional provisions will be provided for, but how robust, how good, we don't know yet. I guess the last thing is how is GST going to get administered? Because currently we have VAT authorities at the state level. You also have customs, excise, and service tax at the central level. But how are they going to come together to implement one set of law in a cohesive manner is a question. And I'm sure that's something that grapples the people in the government more than it baffles us at this point in time. And I am aware work is being done, so we hope that there is some clarity on that will emerge in due course. I think this is the pictorial depiction of the one key element that I want to spend a minute talking about, and which is that in our current system of multiple indirect taxes, what often you see is a net price as a customer of a service or a good, and that price includes the cost of goods as also many other tax costs and the inefficiency that exists today. So for instance, if you're buying a good from a trader, from a distributor, and he charges 1,000 rupees from you, you can assume that it includes the cost of the goods he's selling. It also assumes some amount of service tax cost that the distributor bears for renting the premises that he has, because he doesn't get credit of it, right? So what you see today is a bundled price including the value, the tax, and the attendant inefficiencies. The good news in the GST era is you will see a more transparent system of pricing, because tax is not going to be a cost at any chain, at a level in the chain of transaction. So hopefully you'll see the economic value of the transaction as distinct from the taxes that are embedded in the transaction. So that's it from my side. There are a couple of other slides, but I think it's frankly contains in summary what I've already talked about. I do want to spend a minute talking about what should you be doing now. I think while the question of whether GST will come through on the 1st of April 2016 is still up for debate, and there are many bettors betting both ways. Without getting into that, what I do want to say is now is the time for you to actually go back and look at how your businesses are conducted, map your existing processes, see what GST is likely to do for them. Also, more importantly, look at the laws as and when they come through, and there will be issues that you will have to go back and represent to the government, because this is a transformational change. It's transformational and difficult not just for you and me, but for the government, for every stakeholder. So the thing to do is actually stay tuned, watch all the developments, and communicate and represent to the government too. They too need the help of the industry, and I think we need to take a collaborative approach there. Thank you very much.
She's mostly touched upon single registration. You need not register in different places. If you have different godowns in different places, if it is registered in one place, I think most of the godowns now rent will go down drastically, because most of them now registering the godowns in different places because of the tax structure. Now if it is going to be uniformity in tax, I think this is going to be reduced, number one. Number two, she has touched upon that paper, what you are going to carry along with the truck. It is going to be very transparent paper, proper paper, otherwise you will not get a credit of VAT. It is going to be a problem. So all these things she has touched upon, and she said the 1% levy by the state government, whether it is possible to get it back or not, no one is sure that 1% what you are paying. All these points she has touched upon. This particular session is very crucial session because everybody wanted to have their lunch at 2 o'clock. That's what the organizers told me, that I should be strict in timings. So I do not elaborate further more on this. Let me go to the third speaker of the session today. is Mr. Rohit Jain, partner ELP, qualified as chartered accountant and lawyer, involved in various policy initiatives for various sectors, industries, bodies, recognized as one of the leading tax practitioners in India by Chambers 2014 and 2015. An eminent speaker. I welcoming you, sir, for give your thoughts.
Good afternoon. Thank you, Mr. Krishnan. Thank you, sir, for giving us the insight on GST. At the outset, I must congratulate the association of taking this initiative, because we believe that this is the right time that we should talk about GST, because we have been hearing this GST since 2010. Thereafter, there have been deferment, lot of actions have been taken, and most important point is passing of the legislation by the Lok Sabha. And therefore, this is the right time that industry should come together and identify the issues that are likely to come up under the GST regime, and how do the policy makers address those issues before they implement the law in the country. I don't want to spend a lot of time on the structure and why GST is there, but most importantly, what are the issues today industry is vexing with? What are the issues that industry is facing? We at the outset must tell you that we are registered, most of us are registered with the central government and discharges service tax to the extent applicable. We are not, most of us are not registered with the VAT authorities today, except for sale of some scrap and the stuff, or we are acting as an agent for some principal. Then only we have taken the registration and discharging VAT in the respective state. We only are registered under with the central government and discharging service tax. Therefore, even in then, what issues that today we are facing? We have issues in terms of differential freight, buy and sell rate, whether it is effectively liable to service tax. While there has been a clear clarification by the education guide being an intermediary services, still many of us have been slapped with the notices. We have issues on revenue share, fee sharing arrangement. We have commission incentives paid or received by us, and where is the place of supply of services. We do have issues in terms of Senvat credit, exempt service, Rule 6.3 applicable, not applicable, and there are other procedural issues which have been faced. Are all of these issues likely to be addressed under GST, or it are likely to be multiplied? And please understand, GST is something which is applicable on goods and services. And therefore, let's look at it, what is likely to happen. All the central levies, be it excise, service tax, these import, all of them are likely to merge into GST, and the state levies are also likely to merge into GST. Therefore, what will happen? Each economic transaction will be liable to two levies, which is CGST and SGST. And what does it mean for us? That all of the service providers today who are only registered with the central government will now henceforth under the GST regime need to obtain registration with the state government, and wherever is the place of supply of service, and that's $1 million question, where is the place of supply of service, and we'll have to discharge SGST in the respective state. Now please understand, we as a service provider carry out operations across many states, wherever there is a port, wherever there is a customers located. And what do? Therefore, do we need to take registration across the states and comply with the laws of all 30 states today which are there? And we also need to comply with the laws which is the central government. Now, first is constitutional amendment. Why do we need constitutional amendment? Because today states is empowered to levy tax on the sale of goods, and a central is empowered to levy tax on the rendition of services. What is likely to happen under the GST regime? That both center and the state will be empowered to levy tax on sale of goods and the rendition of services. And therefore, we need a constitutional amendment. And the process of constitutional amendment, that is first needs to be passed by Lok Sabha, then it needs to be passed by 2/3 of the national bill. This is part of the compensation mechanism to the states. And this 1% levy is something which is now proposed for 2 years. It may be extended further by another 2 years. Now, what is this becoming? What is the impact of this 1%? One, it is applicable only interstate supply of goods. It is not applicable to interstate supply of services. So we have current issues also, whether it's a supply of goods or services. We will continue to have those problems even under GST, whether it is interstate supply of goods or interstate supply of services. Typically, awards contract transactions, typically transfer of right to use goods transactions, whether it's a supply of goods or supply of services. So those issues will again likely to continue. Second, if I move the goods from my factory in Bombay or Mumbai to a factory in Andhra Pradesh or my warehouse in Andhra Pradesh, I will pay 1% because it is applicable on interstate supply. From Andhra Pradesh, I will again move these goods to say Karnataka. Again it will be liable to be 1%. There is no mechanism today that what has been paid in the earlier transaction get offsetted against the subsequent transaction. No mechanism. At least in the constitutional bill is not been provided. And assuming in from Karnataka, I will sell these goods to a customer in Kerala. Again I will pay that 1%. Because every interstate movement of goods will be liable to this 1% of additional GST without corresponding credit mechanism of this 1% at least. So there is multi-level taxes which are likely to come up on this issue. Then other problem is the way constitutional scheme is provided. Now I want to read, in fact, the most important is the second point. Center and states will concurrently legislate, administer levy of tax on all supplies of goods and services. Now, Mr. Krishnan has just mentioned that we are looking at uniformity. Please understand, each state has been now empowered to formulate their own law. Central will formulate their law for the purpose of central GST, and the state will formulate their own law for the purpose of SGST. In 2005, we have got implementation of VAT in the country. When we have got implementation of VAT, everything looked rosy, everything was uniform. The rate of taxation was 4%, 12.5%. The procedures were common. The credit availability was also common. The way bills and the filing are also common. The filing of returns were also common. Assessment procedures were also common. Having books of audit, audit of the books of accounts were also common. Now when we are sitting in the year 2015, none of the things are uniform across the states, none of the things. The rate of tax has undergone change from 4 to 5 in some states 12.5 to 14.5%. The procedure for assessment is different, the audit forms are different, the credit mechanism is different, way bill forms are different, everything is different. While we have got the VAT in the year 2005, we wanted to have a uniformity. Now what is happening under GST? Again, each state has been empowered to formulate their own law. Therefore, what is the assurance that when the GST comes in place in the year 2016, assuming, and 2017-18, the uniformity will be maintained? While GST's council, one of the part is that they should look at it, the policy level issues, and may recommend uniformity. But is that binding on the states? Answer is no. Because under the constitutional, they are empowered to formulate their own laws. And now look at it from the logistics services perspective. Today, we are only, adhering to or paying taxes as per the central government, and we are following the central government rules and regulations. Tomorrow, what will happen? Do I need to follow each state government's rules and regulations, which ideally should be uniform, whether it's likely to be uniform? Because again, if each state provides their own procedures, each state provides their own laws in relation to the assessment, the rate of taxation, everything, there will be a problem in relation to the compliance. Now let's look at it, the last point. What has been provided in the constitution? The place of supply rules will be formulated by the central government. So only place of supply rules. There are other n number of rules or regulations one needs to follow. Point of taxation. At what point in time I need to pay tax? Who will formulate those? State government. Credit rules. Whether I am entitled for these credits or not against my SGST liability, who will formulate those?